All right, what's going on, Tycoons? Super excited for today's video. We're going to be doing another Tycoon talk with me and Leon. All right. Now we're going to go ahead and start off by looking at /ES. This is the SPY futures along with the VIX. This is the volatility index. So basically, there's two main things that I want to go over as far as what is going on in the market currently and how to trade the current landscape. All right. Um, so, the first thing you want to maintain and learn to keep an eye of is going to be the VIX. All right. The volatility index. Now, anytime the VIX is above 20, that is when basically there's like some fear in the market. Okay. If it's below 20, we're in a neutral market. And a neutral market for the SPY is basically bullish, right? Because the SPY is pretty much, straight up long term, right? If you look over 50 years or something, right? Um, Now, anytime you see it get above 20, that's when there's a lot of fear starting to enter the market. And recently it spiked up nearly to 40 at 38.94. All right. That is when we saw, the market drop heavily. All right. If we look here, we have the highs of 48.08. This was in the beginning of January, right here. And then, just the rest of the month of January, we dropped really, really hard. And we're starting to recover and show some signs of recovery. But what I want to ask you guys and what I want everyone to ask themselves is, what changed about the market from the beginning of January, okay, to now the beginning of February, right? Did really great news come out? Did anything positive come out? Or, is it negative stuff coming out? That's what you really need to pay attention to and try to wrap your head around in the market right now. And a lot of earning reports are just, kind of beating the Fed, right? Because everyone's waiting on the Fed to announce their policy, and speak on inflation and CPI data. But the earning reports, they're all projecting inflation to keep rising, and they're basically laying the plans down for their how they plan to battle inflation, right, and rising costs. So we rallied really hard. In this period we went up about 7.5%, okay, in a week or so, in a week or two, on the market on /ES. Now, the reason that this is important is because was this justified, right? Did some good news happen for us to all of a sudden, recover and start heading back towards trying to make new highs? No, in my opinion, no. We did have some really great earnings from some really great some of our top like companies, but other than that, I don't really think that there's been much good news. In those earning reports, they're speaking bad about the economy, right, which is going to hurt the overall market. And once we saw the break of this trend line right here, all right, if you guys join the option trading tycoons, you'll get access to all of our analysis. Okay, there's me, there's Leon, there's AJ, there's Aon, and Ron Reed. Okay, there's multiple members that give out their own analysis on the market. But basically, I said, we're gonna break this trend line here, and we're gonna come back up into this oval area. And I think we're gonna rally, out of breaking out of this trend line. And then eventually we're gonna come back down to these levels because this is where demand is, okay, and this is where people are buying it up. And we kind of just rallied out of that for no reason. I think just like a lot of people have been wanting to get back into the market, but really the market news has not gotten any better, and I think it's going to come back down and test this trend line here, and come back down, to 4,400, possibly to 4,300, in the month of February. So I don't know exactly when. We may staircase down or we may drop down pretty hard, but until we actually get some good concrete evidence, I don't think the market is going to be has any reason to justify a sustained rally for really long. So that's, one of the main things that my opinion on the overall market right now. Leon, you got anything you want to add?
Yes, actually, let me actually detach. Okay. Let's share my screen here real quick. You see what I'm looking at?
Go ahead.
All right, so boom, there we go. All right, so you should be able to see my screen, right? VIX.
Yeah.
You see VIX?
Mm-hmm.
Okay, now here we go. So we have this huge gap right here, right? Now, this is my thinking. These are the stochastics. Now, stochastics I use for divergences. When it's not following what's on the chart, then that's the divergence. If this is up higher than this level, but this is lower than this level, this is saying that this is supposed to rise. That's what a divergence is. It's supposed to rise to follow what is on this indicator. What I'm seeing on the daily for VIX is that VIX could go to and exceed around 32. That's what I'm saying. Now, right here, you'll see that it looks like it's going to pull back. So when it pulls back and goes bullish, that's why I've been telling people in the group, hey, we're not, oh, this is the 4 hour. We're not bullish yet. Like, we're not bullish yet. It's just going to go up, make a lower high, and then we're going to super drop, as you can see on the 4 hours. So if we scale down to the 1 hour, you'll see a little more clear how we pretty much have a little resistance right here. By the way, each one of these lines are the support and resistance for VIX. So I've figured out a way for, you know, for finding the support and resistance, even if the stock has never been up that high.
Mm-hmm.
So on the 1 hour, we can see, okay, we got resistance right here around 25, 28, and then we can go higher to 26.60. This it's literally it's probably gonna do that. But as you can see, it's a small divergence right here, right? So this is lower, this is higher, but on here, this is higher, this is lower. We're probably gonna pull back a little bit. I say we'll probably pull back to this support right here, 22.56, but we'll have to get below 23.85 first. We get below that, I say we pull back here, all right? We want to grab that gap fill here around 19.29. Don't know if that's gonna happen, all right? Because as you can see, the divergence goes way back here, and that's where we're pretty much getting to right now. You see that? So that's where the divergence started at on the stochastics. Let's actually move this over so you can see. I think it's lagging a little bit.
Yeah, the SPY is down 2%. I mean, I think your son's lagging for sure.
Yeah, of course it's lagging right now, but I'm not even gonna draw the trend line because it's gonna take too long. As you can see, it's gradually going up on the stochastics. Here, you see all the bull, you know, BS, like it went down, then it's going back. That's why we're at these levels. I think, you know, once we're, you know, at resistance right here, as you can see, we'll probably get rejected and fall back down, go bullish. But that's what I see. Once we fall back down, we are not bullish, fam. We are not bullish. Go ahead and grab you some SPY puts or some QQQ puts or SPX puts or NDX puts, or you know, if you lost
once we
once
come
we
back
go
down to like
bullish.
19.
Yes, no, I don't think we're gonna go back to 19 from what I'm seeing. It's wishful thinking, but once we get around 23, 22 around there, I start looking for shorts because it's gonna be quick. It's gonna be, you know, they're gonna stop hunt. Stop hunt meaning everybody's thinking one direction, everybody's bullish, and then they have the stop losses, and then oh snap, it's falling. Nah, it's probably gonna, you know, pump back up here, and then people's stop losses are gonna get hit. A bunch of people are gonna get stopped out, and that's gonna fall even more. A bunch of people are gonna get out, it's gonna fall even more. I think that's the game we're seeing here. So I think we get rejected around this area right here, 25, 28 on VIX. You know, like I said, or like you know, Zach said, VIX goes the opposite way of the market. So we're gonna get rejected right there. What I'm thinking, even if we don't get rejected right there, I think we go up to 26.60 and get rejected. At some point, we're going to fall back down on VIX and go bullish is what I'm thinking. And then when that happens, boom, that's when we assess for that big drop, because I think that's what's coming. As you can see on the 4 hour. Once again, let's pull up the 4 hour. This is lagging really crazy right now. And then let me show you something. So on the 4 hour, you can see that divergence right here. But let me show you something else that you probably didn't see. So if you, I'm gonna have to make this trend line just so people can see it. If you draw a trend line right here, right? Now let's take everything into account. You draw a trend line right here. All right. That's showing a divergence, a bullish divergence. It broke the trend line here. So what happens when you break a trend line? It's going to come back to retest, right? So I think us going bullish won't be us going bullish. It'll be us just retesting. We possibly actually stretching out this trend line, depending on how they want to play it, how the market makers want to play it. We could actually drop back down to fill that gap, as you were saying, Zach. We could do that, test the trend line, and then go stupid, like bullish on VIX and bearish in the market. That's what I'm looking at. So on a 4 hour, it's not looking good, fam. I'm gonna give it back to you.
Okay. Let's see here. All right. Is it showing my thinkorswim?
Yep.
Okay. Yeah. So I got some similar levels kind of for the VIX resistance. Yeah. So this is the gap we created today. We did come down a little bit and fill some of that. But it didn't really drop all the way down. It's the gap you were showing, and then this is the much larger gap down to 20 that we have on the VIX. If we look at the overall trend, it spiked up really big. This is the volatility index. Of course, it's going to be really volatile. We had some consolidation right here. Okay. A little triple top right there, and then we dropped. And it's been dropping pretty hard. So it makes sense for it to come back up, right, for the market to come down. But I think that I'm not too sure if we get the gap fill below 20, because that may not happen until we're back in a neutral market. It may try to hover around it like it did right here, where it just barely got to the top of it and then recovered. So if we look at ES, which is kind of just like the overall market as a whole, right? The S&P futures, this is kind of like my game plan that I said that I think we're going to see in February. It's the February 3rd right now, so it's very early into February. But it's already starting to happen. Okay, so we broke this trend line that we've been testing on the 4 hour chart for a really long time. And we had a nice breakout. And if we extend this to the right, okay, this is where I think we're going to find some support again in February or March. Is going to be somewhere kind of like in this area right along here. Now it's short term. In the meantime, with VIX, that gives the, this right here is going to be a very key support level, right? And I think we're going to bounce here today and possibly Friday, for instance, tomorrow. We see a nice green day, perhaps maybe at like open, it goes up after hours or something like that. But this gives us some room. Basically, if ES and the SPY and everything kind of just goes up, right, and we trade it up a little bit like this and don't really go straight up for the next week or two, but we kind of bounce and just recover a little bit, that will enable the VIX to go ahead and come down and fill this gap to 20. So I like the the game plan that you got there. I think that we will end up seeing some rejection around this 25 level and possibly come back down to fill this. I'm not too sure if we get the full gap fill down to 20, because below 20 we'd be in more of a neutral market, and I just don't see any conditions for us to be in so much of a neutral market. but I think maybe long term, when we say long term, like maybe for the month of February and March, might be a bearish outlook. And the VIX might rise, but short term here, we're going to be watching these gaps down below, while we're at some pretty close levels, just a few dollars below it, or I'm sorry, above it, just to try to catch any quick bullish pops that happen in the meantime. Um,
Mm-hmm.
and let's talk about some earnings. Okay, we had Facebook. All right, look at Facebook. I mean, this is just
Crazy.
um
Crazy.
so let's look at the daily chart. I had so many alerts going off. This gap, let's look at how many years old this gap is. I think it's maybe like 3 years old or something like that. This is a gap actually back from the year of the
Last
COVID
year.
crash. Yeah, so
Oh,
all right,
before last. Yeah, yeah, yeah.
2020,
Mm-hmm.
summer of 2020. Facebook had its earnings, ironically enough, and just gapped up massively. Okay, went from 230 up to 300 in a very short time, and in that process, created a nice big gap between 46 and around 235. Now, if we zoom in today on the daily chart, I mean, not only did we just create a huge, massive, a gap again right here, but look at exactly where we fell into. I mean, we mentioned this earlier in the Discord today, but look at how we fell right into the gap. I can't see that as a coincidence. you know and big shout out to you. You are definitely the first guy ever to show me like gaps and trading gaps, charting gaps, setting alerts on the gaps. I mean, that's just one thing that's really helpful, right? Like if you're a long-term investor on Facebook, right? And I had been waiting. I'm like, man, I don't really want to get into Facebook though, because that crap's expensive, man. It's when I was looking at it, it's like 320, it's 380. I'm like, nah, man, this is I'm buying the top. I don't want to do that. I got all these alerts today on Facebook. And I mentioned some leaps in the options trading tycoons Discord suggestion plays. And I don't think Facebook is bad to start getting a long-term position for, right? Of course, now it's not financial advice, it's just my opinion based on the chart. But I think, and I'm pretty sure a lot of other people think, Facebook is still going to be around 10 years from now, right? 5-10 years from now. And if you think so, and you think that their business is just going to keep growing, then buying now for long-term 5-10 year holds, this is a good time to buy, when it's at 237, when it was just trading at almost 400. Maybe don't go all in right now. Invest 20% of your position size, right? Like if you have $10,000 you want to start building into Facebook, you can put 20% of that in right now, get your feet wet in the game in case it does snap back and recover very quickly, right? But you're planning ahead in case that it doesn't recover quickly, and if it does continue to drop throughout the year, possibly to 220 or 200, you still have a large amount of your investment sitting on the sidelines waiting for it, right? To jump in at these lower prices, so that eventually, in the future, if Facebook does go back to its all-time highs, let's go ahead and take a look at the returns on that, because this is one way that I really want people to try to learn how to invest, and just think about it this way. If you're going long term on Facebook right here, you've got 62% upside to the all-time highs. So if you think that Facebook's gonna reach all-time highs again over the next coming years, regardless of the market in general, yeah, the market may go down lower, but you may be able to get it lower. But if you think that in the future Facebook, after this correction, will be able to get to it, it's offering over 60% returns on your investment, right? Versus buying at the top at 380, and maybe hoping that Facebook is at 420, 450 the next year, just to get some profit. Another one that had a really good earnings was Google, and Google actually shot up massively, right?
Mm-hmm. Mm-hmm.
That was pretty wild. And this one is go ahead and fill in the gap down. I actually have some Google 2800 puts, little or like a put spread. That one's doing nice today. But yeah, that's, we have this nice gap here, and this is why we trade gaps, okay? Because yesterday, if you noticed I had the gap, and we have I have some 2,800 puts on Google, and we'll see if it comes back down to fill this gap quickly, or it could recover and take some more time to fill this gap. But that was really impressive to see Google, especially with so many companies tanking. Um, really, really impressive, honestly. I think it was to see Google jump up like that. I'm gonna pull up the chart for Amazon. Why don't you go ahead and give me your thoughts on Amazon?
Actually, pull up Apple first.
Apple?
Yeah,
Okay.
pull up Apple first. All right, so go to the 1 hour, and I'm gonna show you what. Matter of fact, okay, that's what we're looking at. Yeah, go to the 1 hour. Let's go to the 1 hour, and you'll clearly see that gap right there on the 1 hour. Apple.
The gap down.
Yep.
Hold on.
It's really, really slight. I mean, it's really slight.
I don't see one.
Just closer. Right there. There. Nope. Go over to the right. There it is. You see it?
This?
Yeah.
Where did that come from? Oh wow. Wow,
Exactly.
that's a crazy catch.
Crazy. 158 and some change. So let's highlight that gap right there. Boom. Yeah. Now, if we're looking at the Wyckoff schematic, which basically says accumulation, trend, distribution, drop, and then, the market goes in cycles. If we're looking at the Wyckoff schematic, go from that. If you can highlight from that gap to now, boom, you'll see how from that gap we trended up, and we've been consolidating ever since.
Mm-hmm.
And I'm pretty sure that yellow line is that your 50 SMA.
Yeah.
Okay, it's literally barely hanging on by a thread to the 50 SMA.
For dear life.
I personally would say February 25th puts for 158 for Apple. They're like 78. It's like $78 right now. You can get like 10 of those for $700 or $800 instead of getting, an Amazon call or an Apple call or something like that. You can get 10 of those. And let's just say, okay, people want to go for the big bucks, but let's just say it goes to $3 per contract, right? So it goes to $300 per contract. That's $3,000.
Mm-hmm.
Or even if you just grab one, that's you made a couple hundred from $70. So that's what I'm looking at. Wyckoff, clear distribution right there, and at any point that could drop. So Apple is a big in. I think they're big in the Nasdaq. I think that's their holding. So if that drop,
look at this. Tomorrow is their dividend payout. So it makes
yeah,
sense for people to hold through the dividend, right? Because you don't want to sell right before they pay the dividend. Why the fuck would you do? Why, or excuse my language. Why would you do that, right? So that's so does that comes out first thing in the morning, right? Okay.
Doesn't make sense.
All right. Yeah. So those Apple puts might be pretty good play here tomorrow. I'll be looking at those for sure. Definitely good shout out there. Good look there. And I think today we'll go ahead and end it on that. All right. We didn't really dive into crypto or NFTs, anything like that. Just kind of wanted to go back to some of the roots and fundamentals with the stock market. So yeah, with that being said, thank you guys for watching. Okay, don't forget to like, comment, and subscribe. Let us know some stocks you guys want us to look at. Any crypto pairs, blockchain technology, penny stocks, big caps, blue chips. If you need some tutorials, some stuff like that, we're open. We're trying to keep this to broad topics and more of open discussion versus just constricted to just maybe like chart analysis, right? So with that being said, we'll end it and stay tuned for the next one. Okay.